Hi, I'm Tom Summers with Edina Realty. Today I want to talk about the power of earnest money. I want to start at the beginning for all of you that have tuned in that aren't really familiar with the buying process or are starting to think about buying a house. Earnest money check is something that you're going to have to provide to your buyer agent when you write a purchase agreement or an offer on a house. Typically there's three pieces to an offer. There is the pre-approval letter that you get from your lender saying that you're approved for a loan for this house. The second would be the purchase agreement, which is all of the documentation of the offer. And then the third piece would be the earnest money check. The earnest money check is essentially something of value that you are submitting with your offer that says, hey, I'm serious about buying this house and here's X amount of dollars down to show you that I'm a strong buyer and I want to buy. The clarification I really want to point out here, because it's confusing for a lot of people, is no matter whether it's $500 or it's $10,000 in earnest money, that earnest money is a credit to you at closing. It's not like a gift to the seller. So if you have to bring, let's say, 20% down on a conventional loan, or you choose to do that, and you write a $5,000 earnest money check, when you come to closing that day, it'll be 20% down minus that $5,000 in earnest because it's a credit to you at closing. Okay, so just for clarification, it's not a gift. With this earnest money, a lot of buyers don't understand the power of the earnest money check. It's changed a lot over the years as our business has changed, but one thing has been very, very steady in this industry, which is foreclosures and banks. So when you're dealing with the banks, they really have a tendency to believe that the bigger the earnest money check, the more serious that buyer is and the more able that buyer is to purchase the home that they have for sale. So I think whether it's regular residential or it's a foreclosure and a short sale, the more you can put down in an earnest money check, the stronger it makes you look. I can tell you of two occasions, one here just over the last couple months, where I helped a buyer get a house and I encouraged them to write a larger earnest money check, and they did, and they ended up actually getting the house because the offers turned out to be absolutely identical. But the one thing that pushed their offer over the other person's offer was they had a bigger earnest money check, and that's how the bank decided. So you never want to underestimate the power of that. The other piece of this is you will not lose your earnest money unless you do something stupid and you don't follow the contract. So please keep in mind the only way to forfeit or lose your earnest money is for you not to follow the contingencies that are built into the contract. This is where it's very important that you hire the right agent to help you from the buy side that can explain every one of these contingencies, because it's also my job as an agent to make sure that you stay on track with those contingencies and stay within the timeline so you don't lose your earnest money. The different contingencies could be an inspection. So you're going to have a certain period of time which you can have that inspection. So let's say you don't like the house after the inspection because you find something that you think is wrong with it and you want out. Great. As long as it's within that time frame, you can sign a cancellation. Everyone agrees, you get your earnest money back. The second one would be condo and association docs. They're supposed to give them to you a certain amount of time beforehand for you to review. So if you're going through it and you find some things in the association that you just don't like, you should be able to back out of the contract and get your earnest money back as long as it's within that contingency time frame. That's the most important thing to remember. And then thirdly would be financing. You have to be able to finance the house and get the loan or have it also appraised for the value in which you're offering. So if those things don't come together too, you typically will get your earnest money back. But the key is to stay within the confines of the contract, make sure you hire an agent that knows what they're doing, that can explain to you all of these different ins and outs of the contract, and you'll be just fine. I think you'll find by putting down a larger earnest money check, you improve your possibility of getting that house that you want by a pretty large percentage, because most of your competitors are going to be putting down the bare minimum. So take that advice and use it, and I wish you the best of luck and have a great day.